Hello, everyone. Happy Friday to you. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you to yet another promising edition of the Forex Morning Mastery, which happens to be the last edition for this week. So far so good this week. We have been doing pretty well across most of the assets on our watch list. Remember, the week started on a sluggish note before we begin to see some traction in favor of the assets against the US dollar. Not until yesterday that we begin to see some little bit of momentum in favor of the US dollar amidst concerns regarding the reemergence of inflation in the US economy. Today being the last trading day of the week, we are going to be taking another perspective into the current market structure, as we all know that on last trading days like this, there is a tendency for key players in the market to be rounding up of their positions ahead of the weekend, which definitely would reflect on the chart as price action moving in the opposite direction of the prior leading price action. So we are going to be taking all this into consideration while we look at the current market structure. So in anticipation of today's trading session, I have conducted a comprehensive analysis on all of the assets on our watch list using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of these assets. Well, since the beginning of the week, we have been monitoring three major assets, which includes the US All Spot, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And so we are going to be taking some dive into the current market structure to see how we are going to be strategically positioning ourselves ahead of today. For those who are joining us for the first time, you are highly welcome on board. I'm very excited to welcome you. And what we simply do here as technical traders is to come together on a daily basis in anticipation of both the London and New York session, where we come to review our existing positions, if we have any, and of course use the information we have on the chart to position ourselves in such a way that we can capitalize on any potential move during the London and the New York session. So once again, I welcome you on board, and in fact I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we shall be deliberating on today, and of course be part of the subsequent editions, as the more time you spend with us here, the better you get to understand how our strategy works and eventually be able to use this information you gather in this community to make your own independent trading decisions. So once again, I welcome you all on board. So with that being said, here we shall be diving right into the business, and as usual, our normal daily routine is to check on the fundamental factors that is likely going to be influencing the market sentiments today. And of course, you know how important checking the economic calendar is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that is needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, usually we do focus on high impact events from the economies that affect the assets on our watch list. Now, we usually use the FX Street economic calendar, so we are going to be doing some filtering out. So I want us to include the United States and United Kingdom, which are the economies on our watch list for this week. So let me just take all these ones out and streamline it to only the United States and the United Kingdom. Then the level of impact of this event too, we want to keep it at the medium and high impact event, at least for the meantime. Let's see what majority in the market is looking forward to. Now, if we do that correctly, what do we have here? So for Friday, October 13th, we have a series of impactful events we are going to be looking forward to today. And the first one here has already happened, and that is a speech from the Bank of England governor, which happened about 2 hours ago. And I'm yet to have an highlight on that to see what he's going to say. And of course, whatever he says here will be giving us an insight into the economic outlook and of course the monetary policy of the Bank of England. Then later today we have on the medium impact perspective, we have the Fed's Reserve Acker speech. Patrick Acker is the 11th president and chief executive officer of the 3rd District Federal Reserve Bank at Philadelphia. So he's going to be giving a speech in about 5 hours from now. So we want to be looking forward to what he's going to say. But one thing for sure is that it really does not matter. But the anticipation of this event is going to be giving us a clue into what is likely going to be saying, as most of his team will of course know what he will be saying, and this will impact the market as they will also want to be doing some activities in the market which will be leaving some trail on the chart as price action. Then later today, which is one of the high impact events we are looking forward to today, is the Michigan Consumer Sentiment Index. Now, for those who don't know what this index is all about, normally it's a survey released by the University of Michigan, and it gauges consumer confidence, which has a direct impact on consumer spending and economic growth. And of course, the data here influences market sentiment and asset prices. Now, generally speaking, a high reading is considered as positive for the US economy, which in the long run will be affecting the US dollar positively. Now, let's look at what the previous data said here for the month of September. If we look at the previous data, it says 68.1, which is a little bit on the high side anyways, but from economists projection here, economists are having a consensus of 67.4, which is a little bit lower than the previous month, and this gives us a clue that majority are expecting a contraction in that regard. This is another inflationary data which of course the Fed Reserve will be looking forward to see what this data will be like, as it has a tendency of influencing their interest rate decision coming in next month. Then later today we also have the UOM 5-year consumer inflation expectations. We have the Bank of England's Con Life speech, and then we have the monthly budget statement for the United States much more later today, which does not project a promising expectation, as we are looking at a deficit of minus $78.6 billion compared to last month, $89 billion. So there's a lot of debt right there, and it's not a promising figure for the United States. So with all the information we have gathered here on the economic calendar, as technical traders, what we are going to be doing today is to sniff through the current market structure from a technical standpoint. And of course, we understand that the anticipation of this event alone has a tendency of influencing market sentiment, which will be reflected on the chart as price action. So talking about price action, let's move right into the chart. And the first asset we are going to be looking at today is going to be the US oil spot. Now on the US oil spot, my chart is still loading up, so let's wait for that to come up. All right, so we have it come up right now. So for those who are with me on both my TradingView and Telegram platform, you must have gotten an update on what I said we are going to be doing as regards to the current market structure. And currently we have a buy position running, I think a couple of them right now. And I said on my commentary this morning, yes, that yesterday the market experienced a failed rally, which can be attributed to the immediate reaction to the US government's report of a record high production in stockpiles of crude oil for last week. And in that regard, though we were in a buy position, remember we took advantage of a buy position just above the $82.25 level, where we also were looking for a breakout retest of the $83.15 level to maximize the potential move. And price moved about 30 to 40 pips before we saw that nosedive, which was a reaction to the record production, record storage of crude oil in the United States yesterday. And one interesting thing about the structure that makes me still feel comfortable buying the US oil spot is the fact that sellers who have, despite that strong bearish momentum we witnessed, we saw how it has become difficult for sellers to break through. What happened here? Okay, so we saw how difficult it was for sellers to break through the $81.50 level a couple of days ago. Then we saw what happened yesterday despite the strong bearish momentum, and the inability of sellers to break through the structure is a clear sign that buyers are gradually gaining momentum behind the scenes, and that area could be serving as an accumulation phase and a platform for more buying opportunities in this market. Then I also deliberated on this structure here yesterday. Remember, we had a very long consolidation phase where price was initially confined within this range between the $85.15 level and the $83.80 area before that breakdown of the support line happened, which of course we took advantage of, giving us about over 200 pips in profit on that one. And one of our expectations yesterday was that this trend line here that was broken at the beginning of this week is likely going to be seeing some retest of structure, which did happen, as you will see right here. We saw the breakout of the trend line. Price went into a choppy situation before it came back, retest the trend line a couple of times to incite an uptrend move. And the inability of price to break down the structure is still projecting a strong bullish momentum in this market. So like we said yesterday, we're holding on to a bullish bias in this market. Now this morning I shared an update, and as at the time I shared an update this morning, price had already broken out of the $82.25 level. I actually missed out on this opportunity as this happened during the middle of the night. Of course, I was fast asleep then. So what I did here was to position myself above the $83.15 area. And if you had done that, price has broken out of that structure, and it appears it's broken out of the $83.80 level to make us maximize the potential of this bullish move. And for those who had bought here, you will currently be having 170 pips in profit, while those who bought with me later this morning will currently be having about 95 pips in profit right now. And those who bought the third position here will currently be running with about 25 pips. So it has been pretty good start to the Friday's trading session as price continues to the upside. So right now we do want to be moving our stop losses, and I'm not going to be considering this as a significant profit, especially for those of us who capitalize on the breakout of the $83.15 level. So at this point, I will be suggesting that we place all our stop losses, secure the current positions around the $83.15 level, which is going to be enough room at least for price action to breathe in the anticipation of an uptrend continuation. So on the US All Spot, we have maintained our bullish bias since yesterday, and it appears price is still holding on in that particular direction. Then one more thing I would like to reveal to us here, which further emphasize the potentials of buyers here, is this lookalike double bottom structure. As you will see right here, price tested the $81.50 level the first time. That was on Thursday, and during the early hours of today we saw, and sorry, during the later part of the New York session yesterday, we saw another retest of structure, and the inability of price to break down the structure is a sign that we might be seeing a reversal move. And at this point in time, the $83.80 level appears to be the neckline of that reversal pattern, and as long as price remains above the structure, we shall feel comfortable in our buy position for this week. So let's see how the market is going to play out from this area, and trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So we have multiple levels here that we can still use to maximize the uptrend move. We have the $84.35 level. We also have the $85.15 area, and we also have the highest point this week at the $86 area, where breakout retest of the structures will be welcoming more opportunities in this market. So let's be on standby to capitalize on these moves. So these are my views here on the US All Spot for today. So let's see how the market will play out, and of course I will be with you in the comment section of both my TradingView and Telegram platforms for updates as at when due. So if you have any questions whatsoever as regards the current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next asset on our watch list. So you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. I'm aware that there is a lag in the time of delivery here and the time of reception over there. So I know there will be some couple of seconds. So if you still have questions while I move on, feel free to drop them in the comment section. I will be checking them from time to time to answer your questions. So with that being said here, let's dive right into the next asset on our watch list for today's trading session. So the next asset on our watch list is the GBPUSD. What a phenomenal 24 hours we have here, as we finally saw price break down and retest that ascending trend line that has been supporting that bullish momentum since the beginning of the week. Well, we currently have about 4 profitable sell positions, totaling approximately 200 pips in profit right now, as the pair continues to decline, and it appears sellers are still trying to push price further to the downside. And well, this is the reason why this is the pound sterling is still under persistent pressure from the strengthening of the US dollar due to the recent US inflation data and prevailing risk aversion sentiment we were able to take note of during the trading sessions yesterday. Now, before we go into the details of what our expectations will look like, I would first of all run us through how this week started and what led to the decisions we were making. Remember, at the beginning of the week, we initially had a sell position running using this descending trend line here as our yardstick to guide trading activities on the first day of this week. And we did agree that as long as price remain below that descending trend line, we feel comfortable in a sell position, and if price breaks out of that descending trend line, then we want to be looking out for buying opportunities. And of course, we saw price take us out of that sell position at a worst case scenario break even, and we saw our first buy position for the week triggered had the breakout of the 1.2200 level. We kept on adding more positions as price continues to climb up, breaking out structures like the 1.22360, 1.22650 area, and finally the 1.2300 level. And one of the things that made us feel comfortable buying the GBPUSD this week was that beautiful ascending trend line which we identified after connecting the series of higher lows. Now, during our live session yesterday, we talked about how the presence of sellers were beginning to reflect on the chart as we saw how the 1.23400 area became a barrier, negating all attempts by the buyers to break out of that level. We saw that happen on Wednesday during the New York session, and we saw what happened during the early hours of yesterday as the inability of buyers to climb and find a new high was a red flag that sellers might be coming in. And one of the things we discussed here yesterday is that we will be looking out for selling opportunities only if the ascending trend line is breached to the downside. Then we said here that we will look out for a breakdown, retest of the ascending trend line, after which we want to be joining a decline to the downside. And this was exactly what happened a couple of hours into the New York session yesterday. And since that moment, we have been selling. Remember, we had multiple levels where we said we will be using it to maximize the bearish momentum there. So we had the 1.2265, the 1.22360, and the 1.2200 area to milk this bearish momentum to the downside. So we had roughly about 200 pips approximately on all four positions in the last 24 hours. And for those who took advantage of this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now, if you still have a sell position running right now, I mentioned in my commentary this morning that you do want to be moving your stop losses, secure this current position right now as we begin to notice some buy traction at a crucial juncture in this market, which we'll be talking about in a moment. But before we go in here, let's move our stop losses. Very, very important. So I will be suggesting that anywhere around 1.2200 level, and let's say around the 1.22350, we just need to give enough room right here for price action to breach, just to see if the market will continue to the downside. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Are we likely going to be seeing price continue the nosedive to the downside, or are there chances that buyers will begin to resurface in this market? Now, if you look at this current structure closely, for those who are with me on the GBPUSD on Monday morning, we talked about the holistic perspective in this market, where we saw an ascending trend line which has been supporting this bullish momentum since last week Tuesday. In fact, since the beginning of this month, you will see here that we connected the series of higher lows, giving us this ascending trend line to work with in the last 10 days now, I think, in the last 7-8 days right now. And if we zoom into, let me readjust this so that you can capture all the pivot lows. Now, if we zoom into what has been going on here since the later part of yesterday, you will see that despite the strong bearish momentum, you will see that price, as soon as it got into the 1.218, which happens to be our key levels for this week. For those who don't know, please check my video on Monday morning. We talked about how we identify that key level. Now, we saw how price, as soon as it came back into this ascending trend line, we begin to notice some buy pressure resume around this area. Now, if we consider the uptrend situation since last week and the fact that price is currently finding buy pressure above that ascending trend line, we cannot ignore the potentials that buyers could come in to incite another wave of bullish momentum. And one thing I said in my commentary this morning as regards to the setup is that we are going to be buying only above that ascending trend line, and if we can identify a reversal setup to work with. Now, if you look at the structure here in the last how many hours now, I think about 12 hours now, 13 hours now, you will see that price action appear to be gradually transitioning into a reversal pattern in the form of a double bottom structure, as you will see here. Now, the lowest point price action has been for this week is around that 1.21750, and the next attempt by the sellers to break down this low was failed, as you will see, just right around the 1.21890, giving us a higher low. And whenever we notice higher low in the market, it's a clear sign that buyers are gradually gaining momentum behind the scenes. Now, with a potential reversal pattern in play right now, the next thing we want to be doing is to identify the neckline we shall be using to validate this reversal pattern. And if we mark it out correctly, I would see around the 1.22100 area seems promising. 22100 level seems promising to place a buy stop order. If you're profitable so far this week, you can afford to do that. But if you're not, then you want to wait for some confirmations to happen before you jump into this position. So for me personally, I already have a buy position running right now, with my stop loss having a very wide one just right below that key level at the 1.218, and let's see how the market will play out here. Now, let me recap what I just said here for those who missed out on that. So we had this impulsive move all the way to the downside. We begin to see some buy pressure around that ascending trend line, giving us a situation that looks like a reversal pattern in the form of a double bottom structure. Now, with the neckline situated at the 1.22100 area, we need a breakout of the structure to validate this reversal pattern. Now, for those who are profitable so far this week, you can afford to place a buy stop order above this neckline to capitalize on this bullish move. However, if you are new with us and this is your first time taking a position on the GBPUSD, that is, you are coming in from a clean slate, then I will suggest that you exercise patience and wait for confirmations before you jump into any positions here. And this, of course, will reflect on the chart as a breakout of structure, price coming back to retest the structure or the ascending trend line here by pressure. Then we want to be part of an uptrend move. Now, remember that we have multiple levels here that we can use to maximize these uptrend situations. So we have levels like the 1.22360, 1.22650 level, and the 1.2300 area. I think we still have one more just right above the structure if price will go on to break out of that level. So we have about 4 levels here that we can use to maximize the potential of this bullish move. So that is how we are going to be managing a bullish expectations in this market today. However, in as much as we're looking out for buying opportunities, you know how we do it in this community, we cannot ignore the potentials the sellers also have in this market. Now, if we look at this current structure here, what is it that we want to see on this chart that will make us feel comfortable changing our bias from bullish to bearish? Well, personally, I will need price to break down that key level at the 1.21800 area, taking out some buy pressure around that area. Then a retest of structure for confirmation will be beautiful enough to join a decline to the downside. But the way things are going right now, I doubt if that will happen. But if it does happen, we do want to be on standby to capitalize on that move. So these are my views on the GBPUSD for today. I will just encourage us to mark out this level, most importantly the 1.22100 area, which happens to be the neckline of that potential reversal pattern we talked about here, and the 1.218 if price will break down, retest that structure to the downside. So let's hold on to this bias here. It's bullish right now, and we are not selling unless price breaks down, retest the 1.21800 area. So if you have any questions whatsoever as regards to what I have explained so far, feel free to let me know in the comment section. I'm here and very willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to wait for your questions, and you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So, in the absence of no questions, I want to assume we're on the same page. But if you are getting this later than expected, because I understand that there is like a 1 minute lag from the live stream and the reception over there. If you are getting it later, if you have questions, drop them in the comment section. I will be checking the comment section from time to time to see if there are any inquiries whatsoever. So on that note, I will be moving on to the last asset on our watch list for today's trading sessions. So the next asset on our watch list for today's trading sessions is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, I was so unfortunate to meet up with this buy opportunity that started this morning on the XAUUSD. But for those who took advantage of that move, well done to you. It was more of the early hours of today, and I was very much fast asleep when this happened. So in a surprising turn of events, the market has shown resilience after what initially seemed like a breakdown of the ascending trend line, which was actually incited by yesterday's US Consumer Price Index, which is an inflationary data that came in just beyond expectation. And this unexpected turn prompted a swift rebound of the US dollars as investors speculated that the Federal Reserve, based on the outcome of yesterday's Consumer Sentiment Index, are likely going to be raising interest rate further in the month of December to further curtail the challenges of inflation in the US economy. And as a result of that, we saw this huge spike that took us out of all our buy positions yesterday. And I do hope you moved your stop losses accordingly after our live session yesterday as I projected. And if you have done that, you must have been taken out from the worst case scenario about 400, between 350 to 400 pips on all of the buy positions we had running since the beginning of the week. Remember, we have been buying this asset since Monday's trading session after this consolidation phase we witnessed here at the beginning of the week, where price was confined within the 1,855 level and the 1,846 area before we had the breakout of the resistant line. Price came back to retest the structure, and since that moment we have been buying, capitalizing on the breakout of structures such as the 1,865. We also took advantage of the breakout of the $1,874.70 level to milk this bullish momentum all the way to the upside. Well done to everyone who have been part of this profitable journey. And remember that at the beginning of the week we had this ascending trend line spotted, which of course has been supporting that bullish momentum since the beginning of this week. Now, with the way things are going right now, I'm of the opinion that there is some changes in that ascending trend. Let me look at it closely. So if we pick this low here and then let's see what we have. I think there is a little bit of shift in the ascending trend line here, and it's very important that we also update our trend line as the market's momentum shifts. So I'll just give this a blue color instead. Let's bring out our candle chart and let's see if we could do some little adjustment here. I think it's well perfect right now. So right now price is back above our ascending trend line, and in that regard we'll continue to hold on to a bullish idea in this market. And remember, we talked about how the crisis at the Middle East, that is the Israel Hamas situation which is going on right now, has a tendency of influencing these assets. So the gold being a safe haven, you know, whenever we have these turmoils like this or economic turmoils like this, we usually expect a flow of capital from currencies to safe havens just to be on the safe side. And as a result of this, I am of the opinion that the gold is going to continue an uptrend situation. Now, from a technical standpoint, price still remains above our ascending trend line. And of course, when price remains above the ascending trend line, you know how we do it in this community. We continue to maintain a bullish bias and look out for more opportunities to buy. Now, I told you earlier I missed out on this uptrend move. It was very painful, but it's okay. Let's see if the market will be presenting more opportunity for us to push price to the upside. Now, one of the things I'm looking out for here today is some retracement into structure, maybe in anticipation of the events coming up today. Remember, we talked about looking forward to the consumer sentiment index, which is also an inflationary gauge of the US economy, and the anticipation of this event could bring some retracement into structure. So I'm looking forward to price doing some selling pressure into probably the ascending trend line or just somewhere around here, where the appearance of buy pressure will now give me an opportunity to join the uptrend move. Now, for those who had capitalized on the breakout retest of that ascending trend line, that is after price climbed back, retest the structure, for those of us who took advantage of this move, I will be suggesting that you move your stop losses accordingly, lock in some profit while we wait for new setups to emerge on this structure. Now, one more thing I would like to state here, I would like to do some little readjustment to this resistant level as things appear to have changed. So we have the 1,885 area, what a psychological level that is, considering the round figure of that price. So I've readjusted that to the 1,885 level. So let's see how the market will react to the structure. And for those who might be asking in their mind, why have I readjusted that level? Well, let me quickly run you through what I saw here. Now, if we look at what happened during I think about a couple of hours into the New York session yesterday, we saw how this level became a barrier for buyers as we saw sellers come in to negate that potential there. And this happened prior to the inflationary, the consumer sentiment index that came in yesterday, and we saw price nosedive to the downside from fear of inflation in the US economy. Now price is gradually approaching that level, as you will see right now. Now what we want to be doing here is to exercise patience and see how the market participant will be reacting to this price level. Now, one of the things we are looking out for here is a breakout, which is something I'm expecting here. Price taking out all the sell positions within this range to give me a sign that buyers are getting stronger, and hereby taking out all the sell positions within this area. So personally, we should be having a buy stop order. That is for those who are profitable so far. If you have been part of this profitable journey since the beginning of the week, you can afford to leverage on some of the profit you had made by placing a buy stop order above the structure. And for those who are joining for the first time, you want to be waiting for confirmations like a retest of structure or retest of this ascending trend line to incite an uptrend situation, after which you want to be part of that move. So that is one scenario we are looking at here. Or we could see some selling pressure resume below the 1,885, just like it did yesterday. Price retracing back into the ascending trend line, and if I begin to see some buy pressure here where price transitions into a reversal pattern, maybe in the form of a double bottom or inverse head and shoulder pattern or falling wedge, whichever case it may be, all I just want to see is buy pressures and signs that sellers are finding it difficult to drop and stay below that ascending trend line. Then I will be willing to be bullish at this point, then have a buy stop order above the 1,885 to maximize that uptrend scenario here. So on the XAUUSD today, based on the fundamental understanding we have and the technical understanding we have so far this week, I'm holding on to a bullish bias on this asset. However, if the contrary happens, you know the market is a very fluid environment, and for us to be successful in this environment, we want to be as dynamic as possible. And if sometimes the market just does what it wants to do, and if it does that this time around and it goes on to break down that ascending trend line, then this will be the second time the trend line will be broken this week. Remember, this trend line has been supporting our bullish momentum since the beginning of the week, and if price breaks down that trend line the second time, and this could be maybe the inflation of the US economy is seen to be very, very strong at this point in time, which could incite some interest rate hike for next month, then we might be seeing a crash to the downside there. Now, if price will break down that ascending trend line, then I will be looking out for selling opportunities only at a confirmation which would reflect on the chart as retest of structure, that is buyers finding it difficult to climb back above the ascending trend line before joining a downtrend move here. So these are my views on the XAUUSD for today and for today's trading session, of course. If you have any questions, feel free to let me know in the comment section. So on this note, I don't know if you have any questions as regards to my explanation so far. If you do, please feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds as always, waiting for your inquiries, after which I will encourage you to use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And I just dropped the link to the XAUUSD live window right in the comment section. So, you want to be clicking on that link, click on the notify me button so you can get notified as soon as I come on live. So, for those who don't know, the XAUUSD live window is a platform that was born out of popular demand from members in this community who wanted a platform where we can be monitoring the XAUUSD price action real time here on the Sheriff Daramola platform. And here we have it, and I hope to see you right in the comment section of that platform. So it normally starts about 5 to 10 minutes into the New York session, and let's come together to monitor price action during the New York session and see if we can have beautiful trading opportunities like we always do in the past today. So for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get in understanding how our strategy works here, and eventually be able to use the information you gather in this community to make your own independent trading decisions. So once again, thank you very much, guys. It has been a wonderful moment. We were able to attend to three major assets today, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, where we were able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns, only to gain valuable insight into the price movement of these assets on our watch list. So thank you very much, guys. And if you have found this content helpful and useful in making your independent trading decisions for the London and New York session, I will really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it helps the YouTube algorithm to promote the video to a wider audience of traders who may find this content beneficial to them. So the more likes, the more it will push the video out to the general public. So thank you very much for your support, and I really do appreciate them. Harashi Storm, thank you very much, and I'm very glad you found this useful. So in that regard, I will be wishing you all the best of luck today, and I look forward to seeing more of you same time next week Monday, as we come again to have another fresh new look at the financial market. Now remember that we are the last trading day of the week, and by tomorrow, Saturdays and Sundays, I will be sharing new setups ahead of the upcoming week on what we shall be looking at on a new set of assets for next week. So if you had not subscribed to my channel, please do right now so that you can get notified as soon as I share new ideas and new commentaries on this platform. So thank you very much, guys. I look forward to seeing you right in the comment section of both my Trading View Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful day, everyone, and in fact a wonderful weekend to you all. Bye bye.